Hello, everyone. Welcome to the weekly roundup. Today we will cover monetary policy, oil prices, and earnings releases. Hello, Ben.
Hi, Eva.
How's it going?
Sun shining, but the temperature isn't warm enough yet.
It's perfect. It's literally
Okay,
perfect.
okay. Agree to disagree.
Okay, we're gonna start off with monetary policy. Rates still look mostly on hold, but we're starting to see a bit of probability creep into hikes and almost nothing for cuts. What does this tell us about, where rates are headed over the next 6 months?
I think that's a great starting point. I think that's probably the biggest question debate I guess I'm having around what to do from this point forward. I think over the last 18 months, it's been the most volatile period around inflation than I can remember. As we even last year, I think over the past 12 months, we would have, forward guidance where rates are going up and then rates are coming down, and there was a huge amount of volatility around it. And then even coming into this year, we had the view that rates would come down. Obviously, this was before the conflicts that have transpired this year, first with Venezuela and now with Iran. So that has changed kind of the forward-looking guidance. So I will comment a little bit in the slides just around and maybe forward view in Canada versus US inflation, but I'll just comment on it now. And we have quite a different dynamic where inflation is significantly more hot in the US versus Canada. And so I think the question that you're saying and making is really in regards to what's happening with the US. And, you know, I think we're going to see a change of leadership. Well, we already know we're going to see a change of leadership, but I think we're going to see a change in how he comments on forward guidance. And I think that's going to change the dynamic a bit. But to your point, right now, forward looking looks like rates go up in the US. And I'd say that's yet to be determined. It's all dependent on what happens with the Strait of Hormuz being closed. And if it continues to be closed, then we're continuing to have upward pressure on prices. But that could change on a dime.
Yeah, speaking on the Strait of Hormuz, yes, and Iran look to be getting closer to a deal.
Mm.
And there are talks saying that Iran is going to open the Strait of Hormuz like within a month of signing whatever deal they come up with. What is the ripple effect on oil prices and inflation?
I think massive, just judging by what's transpired so far. Yeah, I listened to an oil analyst last week really talk about, well, oil should be at $200 if this is what's really happening. So, and they're saying, we're too low. I mean, we're up 40%. So should we be up 140%? I guess you could argue for that. But to your answer around what happens if there is a settlement, we've seen higher in every commodity. And the one thing though that hasn't happened too much oil related is that the forward curve is still lower. So front end prices is still higher than this would really help with consumer confidence because right now the economy is kind of chugging along, but mostly because the countries are just surviving on higher spending, but it's mostly mandatory spending. It's not like there's massive consumer spend right now. And so I think if you had an agreement where the strait opens, you probably see oil prices down, my view, 20% within a short period of time, maybe lower depending on how the economy goes from there, but probably 20%-ish material correction, like the fertilizers, potash, urea, like those things would come down too. And that probably helps next year because most of the planting's already done, and so most of those costs are already dealt with for this season. And so ultimately that does bring that view on that inflation is transitory and we probably get a flattening, and we likely, depending on what happens to the economy, we see rates go on hold again, maybe even go to a cut if the economy deteriorates further. So I think it has huge effects.
Yeah. Staying with earnings season, we spoke last week about NVIDIA. The Canadian banks are front and center this week. What are the numbers telling us about the health of the consumer and,
Hmm.
the larger economy?
So their earnings were good. Banks' earnings were good, and I guess that's not hugely surprising. I think is their loan loss provisions weren't as big as expected. All of these things probably 6 months ago where we talked about and said if they, you know, banks got hit because they revised, they increased their loan loss provisions, and then if we get a couple of good quarters, that's going to dissipate, and that's really how it's played out right now. I think I said 2 weeks ago banks are priced to perfection, and I'd still be in that camp where I think they're quite well right now. As for the health of the consumer, I think if you scratch below the surface, consumer insolvencies are rising. Not showing into the bank's numbers yet because that number is still very small, but the rate of change of insolvencies is increasing in Canada. And so I'd say that's something that I'd continue to pay attention to. And as that number rises, inflation gets dealt with, these have ripple effects on the Canadian economy. And so I'd say the Canadian consumer isn't super healthy at this point.
Yeah, we're not.
Prices come down. All right. Good. Okay, so got the date right this week. We are recording on Thursday, May 28th, around 1 o'clock. So anything that happens between now and next week, we will comment on next week, and we're heading into month end. All right, let's start off with this. So this is Canada. Major urban centers are bearing the brunt of the changes in population. And so I think this is a great chart just to think about real estate. Obviously, there's many things to point out, but this is the monthly change in population by consensus in the major centers, Vancouver, Toronto, Montreal. And as you know, we had major population growth that took off through coming out of COVID, opened up the borders, and population growth accelerated. And now what we're seeing is in these major centers, Vancouver, Toronto, Montreal, we're seeing population growth shrinking. And so this is having a material impact on real estate prices. And so if you look at these major centers, they have been the most negatively impacted. And I think really has an impact on what's likely to happen with rates and or inflation, we'll say, over a short period of time. But this is a view that the metropolitan areas are shrinking. People are moving out to other areas as well. But this is having an impact on the economy. This was the COVID recession, and typically, if we stretch this data back, typically that as we get into slowing economic activity, this would naturally move lower. But the changing to the rules with immigration really had an impact on how those numbers have changed. Next one is the view on lower inflation. So this is Canada, lower inflation than south of the border. So I think you even probably had a peek at some of these charts before we went through some of these questions off the start here. But these are the things I think that play a major part for what happens in Canada. And so if you look at the left-hand chart here is headline inflation. So this is US showing 7.3% on a 3-month basis. Obviously, this is what's getting the rates market pricing in high rates because they're freaking out. They're remembering the COVID inflation runaway that we saw. I don't think we're in that backdrop right now, but that's what's happening. If you look at the Canadian numbers, 3.1%, which is, yes, hotter than we would have been had the conflict not started, but certainly not anything to be panicked about of needing to raise inflation quickly to dampen down some of those risks. And then even on an annualized basis, even more importantly, if we look at the 12-month numbers, so you have the US there at 3.8% and then Canada at 2.8. So both are, I mean, from Canada's perspective, they're within their inflation bands right now. So nothing I think that we need to be panicked about. And even the US just slightly higher than their inflation band as well. But again, nothing to cause the effect of we need to really raise interest rates aggressively. yes, inflation's a concern if this lasts 2, 3 years, which I don't think is the case, but certainly that's something that we need to pay attention to. And then importantly, inflation excluding food and energy. Well, I know everyone would say, well, that is all the inflation that I live on every day. But central bankers tend to like these numbers. So on a 3-month basis, Canada barely moved 0.3, where the US is 3.2%. And that has a lot to do with the makeup of our countries. And then 12-month basis, again, the US ex food is 2.8, which is below their upper band, and Canada is actually below the lower band. So, inflation is a worry, less so, materially less so in Canada, and I think something that we need to be conscious of. And last one, all the charts today is on Canada's jobs update. So this is May 2026. And so, what's the likelihood that happens? What's going to go on with rates here? I think jobs is the last piece, which I know we haven't talked about today, but has an impact for what's going to happen to the economy. And I think this is a good way to look at it. So year to date for Canada, we've lost 112,000 jobs. It's the worst start since 2009. Just for context purposes, only 38% of the sectors are growing. Manufacturing, of course, because of relationship with the US, is hit the hardest, but generally across the board, weakness is broad-based. And then really what's driving it, I mean, this is a reasonable look at 12% of the jobs are tied to the US. So anything trade related, Quebec is down 87,000 jobs. So that's a huge number and a big impact on our country, and unemployment's rising up into the higher end of the range. And so, I think these things come into the thinking around what the Bank of Canada is going to do. Had lots of conversations with clients and others that have said, what's going on with employment. So I think inflation and employment, these are the big drivers for what the bank's going to do. Inflation's up a bit, but not materially, and employment's weakening, showing the economy's on shaky ground right now. And so I wouldn't be overly concerned that rates are going to go up like we're seeing in the general media. As always, the opinions expressed do not necessarily reflect those of National Bank Financial. Everyone has their own risk tolerances. Anything we discuss today, please reach out to Eva or I, and we're happy to discuss if any of this is appropriate for you.
Thank you, Ben.
Yes, you're welcome.
So what's on the agenda for next week?
So we are into month end. I'd say most of the earnings is and will be out from Canada point of view. Obviously, the US goes first, then Canada, and most of the Canadian numbers are out now. And so we'll continue to see that trickle out. And so we'll be watching that. But as we get into month end, always good to look at where the numbers are. And so, similar to last year, we'll have the tariff tantrum where the markets freaked out. Markets rallied, and even through all that tariff talk. And then this year we had the Iran conflict. Markets sold off, and now markets have rallied in the last 2 months, so April, May. So I'd be looking at around what do we do? What do we do with positioning? Because you've had this huge rally in markets and tech, and I know we didn't even talk about the AI story today, but those stocks continue to rip with Micron going through $1 trillion market cap for the first time. 2 years ago, that was a $70 billion company, 1 trillion today. So,
Wow.
those things I'd continue to be watching and saying, does the settlement of the conflict between Iran and the US become a sell the news type event potentially? So I'd be watching that quite closely.
Great. Thank you, everyone. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. The link to our daily financial heartbeats will be in the caption of this video and in your email box if you're subscribed. For our clients, please reach out to me if you have any questions or if you'd like to have a review meeting with Ben. Thank you once again for listening and enjoy the rest of your day. Bye.
Thanks, everybody. Bye.